Well, good evening. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up for Monday, the 11th of March, 2024. Well, NVIDIA continued with its correction, down another $17 today, so it's off $100 plus from its peak that it made on Friday. Okay, it's the first small correction. I mean, let's face it, it was a stock that got up near $1,000 a share, so it's given back a little bit of it. Okay, it can break a bit more here. It's had a heck of a run-up, but it's not alone. You know, as it goes down, you're looking at others. Amazon got hit, Netflix got hit. I can go on and on as you're coming in. Google came up. It had been one that's down. Then we saw, it's the one that didn't go anywhere. Meta was down today. Microsoft. So it's not alone. The tech sector has seen a rotation taking place where other stocks have been gobbled up, if you will. Traders looking for low PEs or areas that might be the next big home run. Who doesn't look for that? In GDX and GLD, the rallies continue on in those markets. Auto stocks are very mixed today. Rivian's given back. It went to 1352 again. It gave back a chunk of that right now. It's got to prove that it's got a working model here with those new vehicles. Uber giving back a little bit at the same time. And ARK down just a dime. But, you know, ARK, they own a lot of these cryptos, and that's the good thing, the crypto company. So that has definitely helped them weather some of this reactionary storm. Now, tomorrow's the big day for the CPI number, and I'm not going to cover all what's expected tonight and all that. I do that in my research that my subscribers pay me to do, and that's where I'm going to leave that sit. I give a real big detail on it tonight. I also go into the White House new budget. Have any of you bothered to see what the White House is planning? So if you got dollars in your pocket, you're going to have a lot less of them if President Biden gets his way. It's taxation, taxation, taxation on everything. And because of that, he'll say out, and I'm lowering and cutting the deficit that we're running at. Well, if you don't cut spending and you tax yourself to death, you can do that. The top corporate tax rate's going to go up dramatically. I don't want to use a little, dramatically. Your income tax rate, if you're a high earner, can go up to about near 45% now under his plan. Medicare, going right on up. Name it. If there's a way to tax it, his new vehicle calls for doing that. That is his manner of reducing the deficit. Okay. What do I think it would do to big business, to oil and so on? Because he's stopping all that, taxing like there's no tomorrow. Number one, it's a proposal. Number two, I would hate to think the congressman or senator that wants to vote for all that he's got there, if the people that put them in office would want that, and big business and small businesses wouldn't. You heard what I just said. Even small business. This is a big taxation effort that he is proposing. Do I think it'll work against them? Absolutely. We're then going to get, at 5 in the morning, the National Federation of Independent Business, the Red Book Group comes out, and we're going to get the oil stocks. But the day's going to be about the CPI. Is the number hot? Is it cold? Is about where the market thought? And if it's about where the market thought, what do the naysayers do? Are they saying, well, that proves we're right and the Fed's going to cut? Or do they say, no, that number's still too hot and the market goes and corrects because the Fed stays on hold longer? If you bought a put and a call, trying to catch the breakout on the market tonight, I was reading a story on it in Bloomberg. The volatility is at 0.9%, 0.9 of a percentage point. That is the largest going into a CPI report since April of 2023, almost a year ago. So that gives you an idea how important this is. It's even bigger, the volatility expectation, than it's going to be for the FOMC meeting, which is pretty much a given that it's not going to do anything. Plus, you'll know what the CPI number is going into it. So tomorrow's report, it is going to be something you got to be very careful with. Once it's out of the way, yeah, we got to wait on the PPI on Thursday, but it's not as important as the CPI report, in my opinion, and that opens the door for a lot of new trading once that is out of the way. Do remember that we have the Fed meeting, I think it's next week, so you'll get the FOMC after that. So when we look at the market, a mixed day in the stock market, but I would expect that. It tried every which way down, up, and so on. Will we see rallies or breaks in TLT? And those are going to be some of the things you look at. You know, I looked at the CME group to see if volume was acting as a positive for this. Well, while this stock did rally beautifully in 2024, it's had a recent correction. The market is, as you can see, in a minor downtrend at this point. It's come back to the resistance point on the chart at 216.88. Should it take out 220.80, it negates the downtrend. My guess is, are the pros going short there becomes the big question. The support comes back in at the 100-day average down to the Bollinger Band. So the 211.12 to 210.7 area is the next support area should it break down. And you can see momentum was pointing down. It's sort of flattening out right here. DraftKings, I dropped covering Lyft for a bit. Why not? What starts this weekend? You got it, March Madness. So we want to start watching basketball, and the betting is going to begin. Who's going to be the winner on the betting? How big is it going to be? I was hearing today that they were saying $11 billion in revenue was made off of the different companies that are doing this. That's quite a number. But lower highs, lower lows, been in a downtrend. 42.40 is the resistance. You have to clear 43.68 under the current pattern to break the downtrend. And should it fall, 39.66 should be the next support level, the lower Bollinger Band. Then we come to the gasoline fund, which, as you know, I think is getting ready to eventually break out to the upside. Traders have asked me, are there ways to play it? Well, you can always buy, longer dated options, and that's one way. It hasn't given a signal yet that it's broken out of this. The market has done another job of holding the 200-day average at 65 and a quarter zone. It got to 65.35 today before it turned back up. Didn't quite get down there, and it's not in a trend. You have a higher high and a lower low pattern. In the financial services, well, tomorrow's their day. Which way does the market go from here? The trend is up. You're embedded. If you lose the embedded reading, the logical first stop for support, 40.15, not far away, 45 cents roughly, 50 cents, and the resistance back at the 4100 zone. When you look at the industrial sector, on the close of business tonight, you lost the bullish embedded reading. The only time you can get it back before you have to rebuild it is the day after you lose it. So tomorrow, going to be an important day. If it stays lost, then I look for wherever the 18-day average is to be the next support level. Resistance is 123.38. AMC, well, while the trend is up, the bias is down and momentum is down. Hasn't been able to grab any footing. I watched the Oscars with my wife last night, at least part of it. And the trailers for the movies coming up are terrible. So if that's what's going to be the money winners for a while, I understand why this isn't going anywhere. I mean, I didn't see anything really good that is coming out in the immediate future, and Dune by itself can't rescue that. And everybody wants AMC to succeed. They don't want to see the door shut. Higher lows, higher highs in the consumer discretionary, still holding up. So nothing here has hurt the consumer. When the red line closes under 70, now it'll be time that I think you get a correction, but not until then. In the home builders, today was the day where the market lost its way in the marketplace. So you can see that it lost the bullish embedded reading. We're seeing a number of markets do that today. If you have a bearish reaction to the CPI tomorrow by the close, you'll probably get another group that lose it as well, and that begins some form of a correction in the market. On the energy sector, everything still looks bullish. You're back to the upper Bollinger Band. The market is embedded. I mean, those are bullish signals still in the marketplace. And gold is the market that got away from me. I've said it before, and, if I miss something, I'll tell you. I wish I walked on water. I wish I could catch every trade out there. Nobody's good enough to do it. I do catch my fair share from my subscribers. But this market, the vertical rise and the overbought, got away. All right. Do you chase it at these levels? I don't think so. But after having 1, 2, 3, 4, 5, 6 days in a row over the Bollinger Band, which is a sign of super strength, not weakness, you did roll over to the right-hand side. Now, if you had a good-sized break in that and the red line stayed still above 80, then I think the market is a buy. The question is the reaction to the CPI tomorrow, and I'll wait to see that, of course. Silver market is trying to embed. It hasn't done it. It's overbought. It, too, got itself over that upper band, and on Friday, it gave that up, and it stayed under that band today. It's still a sign of strength, and I want to show you. This 2130 to 2126 level, that's a powerful level. You're now coming together where the 18-day average is getting ready to cross over the 100 and the 200. Those are bullish signs. And yeah, I'd rather lose money buying the market on a big break than trying to be a top picker in this market. In the copper market, you're trying to embed right now. Now, China's National Party Congress is over. And now the market will start questioning, can they deliver or not deliver? That's going to be the big issue. I saw that another big developer today had their credit rated down to junk. So they haven't proven that they can get their housing and their shelter costs at all back into consumer confidence there. In BND, TLT, you know it's all going to be about the CPI reaction tomorrow. In the dollar, you had come down. Now you get back within the Bollinger Band. You're oversold. There isn't a trend, actually. You have a higher high and low, and the market's looking to see what the next trend will be, which you flip-flop, not really in the euro. The euro's bullish. Higher lows, higher highs with an embedded reading. So if you were to ask me, what the dollar is going to do, well, as long as that stays bullish, I think that's the game that you've got going on. So, you know, those are the things I want you to look at. Now, I'd like you to join me in the morning, if you'd like, at my morning SPDR ETF video. I'll be recording tomorrow between 8:30 and 9. Once I see the CPI report, I want the markets to open. Then I'm going to jump on them and come out with, hey, let's do this, let's do that. I often want that first half hour of actual trade to go by. And I do realize the S&Ps will be open and all the other markets here that trade off of like the gold and the silver. They'll have reacted to the CPI numbers. But these markets have a way in the first hour, they go one way, and then the market tries to figure out what to do next, especially as the stock and the ETFs open that have to cover themselves one way or the other with what they're based on, which is often a futures market in many of these. So how do you get this? How do you see what I'm doing? Well, you can go to our website under free offers, iraepstein.com. Free offers. You'll see it's all offered there. You can also move your cursor up here to give that a try. I'm Ira. I'll catch you tomorrow. You have yourself a good evening. Take care.